Good morning, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be having a very interesting session where we focus on the major news currently impacting markets. And once we cover that, we'll do some technical analysis and try to understand where we might find some opportunities for today. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So at the same time, we'll begin with a disclaimer as usual that this particular session is not investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So let's get started with the economic calendar and try to understand what are the major events that we're expecting for today. And once we go through these, hopefully we'll trade from a more informed perspective. So first things first, today being Thursday, the 25th of July, we have had quite a number of data releases early this morning. So the first release this morning was the Services Producer Price Index earlier in the morning for Japan at 2:50 a.m. And this came in at 3%, which is much higher than the previous reading of 2.7% and much higher than the forecast of 2.6%. So this basically means that the services prices are increasing at a much higher pace than expected. So with the current reading indicating 3%, it's an indication that inflation is not slowing down in Japan, which might necessitate even more tougher actions from the Bank of Japan. So as you can see from the chart here, there has been quite growth in the services sector. And this is from the month of April 2021. We have seen this trend continue over time, indicating that Japan has finally won the battle against inflation, which might necessitate changing policy, moving from negative interest rates to positive and perhaps increasing interest rates further this year. And this may explain the strength that we are currently seeing in the Japanese yen. So besides that, we had a speech early morning from US President Biden. That is the first speech after he decided not to run for the US presidency. Also, we saw Kamala Harris taking on the role. So it's extremely likely that we will see Biden facing it off with Kamala Harris. And of course, we have an expectation for that. So 11 a.m., fast forward, this is a few minutes ago, we had the German IFO Business Climate Survey, which showed worsening conditions. Right from 88.6 in the previous reading, we expected an improvement to 88.9, but what we saw was a big drop, indicating that there is a pessimism in the business climate. So basically, businesses are expecting to slow down in the near future in Germany. So M3 money supply expanded by 2.2% year over year in the Eurozone, which is much higher than the expected 1.9%, not looking good for the Euro. Private loans year over year grew by 0.3%. This is a disappointment. Everyone was expecting to see 0.5%. Now we have more data incoming for the rest of the day. So among the data that is most anticipated for the day is advanced GDP data quarter over quarter for the US at 3:30 p.m. And this will be released at the same time as the unemployment claims, which is a weekly data point, showing the number of people who are claiming for unemployment insurance for the first time. We'll look at the advanced GDP price index quarter over quarter, core durable goods orders month over month, and durable goods orders month over month. So among all these data, which will all be released at 3:30 p.m., the key focus for investors will be on the rate of economic growth in the US. So we're expecting a growth of 2% in the last quarter, which is the second quarter of this year, an increase from the previous reading of 1.4% in the previous quarter. So looking at the charts to try and understand the data, I will try and remove this outlier that happened during COVID in March, April 2020, and focus on the much more realistic data. So this is the overall performance over the past couple of years. So on average, the US economy was growing at a rate of about 6.3%, moved to 6.5, and the highest that we saw since COVID was 6.8%. Before the US entered a technical recession in 2022, dropping by negative 1.4%, before dropping further by negative 1%. So since then, we have seen the US economy recover and average somewhere around 2.3%. So the lowest we have seen was in April last year, where the economic growth was around 1.1%. And since then, the economy has expanded further, seen a 4.9% growth before slowing down to 3.2 and later on to 1.4%. So this time we expect an uptick for the economy to have grown by 2% in the last quarter, indicating still a very strong economy amid a high inflation environment as well as a high interest rates environment. So why is this important? So the main reason that investors are focusing on economic growth is because the Federal Reserve or the Central Bank of the USA is also focused on US GDP. So the Federal Reserve has taken pride in that the US economy has remained strong. So if the economy remains strong, then monetary policy seems to be in order. And one thing the Fed doesn't want to see is their policies driving the US economy into recession. So a huge drop in GDP would imply that the US economy is headed into a recession and might necessitate an earlier than expected rate cut. However, a very strong US economy might allow the Fed more room to keep holding rates higher for longer as it watches inflation and waits for the inflation to drop to 2%, where the previous reading was 3%. So there's still 1% more to go before the Fed declares victory on inflation. So that's why a lot of investors will be focused on the GDP. So as usual, we know that the GDP of an economy tends to have a direct impact on the currency. So a strong GDP usually is good for the currency, and bad GDP is usually bad for the currency. So why do I say this? So when you talk of GDP, this is all the economic contribution in the economy. So all the production that happens in the manufacturing sector, all that happens in the services sector and mining and many other sectors in the economy. So for you to have the number that is gross domestic product, you have to calculate all production within the economy. So in this case, if the US economy is producing more, then they are creating a higher demand for their currency. And as a result, it tends to strengthen the dollar. If it's negative, then it weakens the dollar. So this means that this afternoon, if you get a number around 2% and higher, that should be positive for the dollar. And if it is below 2%, that would be below expectations. In that case, it should be negative for the dollar. However, if you look at the unemployment claims, this is a major job market indicator. It happens weekly. Basically shows you the number of new jobs, new jobs lost in the last week. So in this case, we will be expecting to see 237K, which is a slowdown from last week's 243K. So the main reason that this is important is because the Fed also watches the job market to serve their mandate of full employment. So when you look at unemployment claims, it shows you the trends happening in the job market sector. So if things are going well, then unemployment claims should be reducing. If things are going badly, then unemployment claims tend to increase. So right now, the Fed is is paying a close eye on the job market right now. I wonder why my chart is not loading. I'll try and load again. So let me just refresh the page. So I just want to show you the data. Yes. So as you can see, the overall trend week over week has been some good growth in unemployment claims. These numbers are not very nice, but you can see right from the beginning of the year, we were getting about 201K per week. We dropped to 185 before the number progressively went up. And as of last week, we got 243K. So when you see these unemployment claims rising, it basically shows you that the job market is worsening, and this is a sign that the unemployment rate might be increasing, which might necessitate the Fed to go for earlier rate cuts than expected. So this might increase the chances of the Fed cutting rates as of September this year. So in this case, an increase in unemployment claims is expected to be quite negative for the dollar, whereas a drop in unemployment claims should be a positive for the dollar. So according to the expectations here, we're expecting a drop, which could be positive for the dollar, and the GDP is expected to spike higher to 2%, which is also positive for the dollar. So if you get numbers that are higher than this, then this should support the dollar to make some recovery. But then if they are worse than this, then we should be seeing a much weaker dollar. So later on in the day, we'll be having a speech from the ECB president, and this is Christine Lagarde. So she'll be speaking at the International Summit on Sport and Sustainable Development in Paris later in the day. Perhaps it may have an impact if she gets to talk about ECB monetary policy, or no impact if she doesn't talk about it. So it's also day one of the G20 meetings. So we'll be looking at this to see what happens next. So that's it. That's what's on the economic calendar for today. So if you look at the major highlights in the markets today, China unexpectedly cuts MLF rate by most since 2020. So if you look at the highlight of the data, so the People's Bank of China unexpectedly slashed its one-year policy loan rate, known as the medium-term lending facility MLF, by 20 basis points to 2.3% from 2.5% on July 25th. That was earlier this morning. So it was the first such reduction in nearly a year and the largest since April 2020, just days after the central bank lowered a key short-term rate as it ramped up support for the faltering economy following the third plenum gathering in mid-July, weaker than expected Q2 GDP figures, and mixed economic data in June. So the central bank also launched a total of 200 billion Chinese yuan via the facility. At the new rate, while injecting Chinese yuan 235.1 billion through 7-day reverse repurchase operations with an interest rate of 1.7%. Last day's action was an unscheduled lending operation because the People's Bank of China usually conducts its MLF activities in the middle of each month. So clearly, China is trying to turbocharge its economy, and the way it's doing this is by progressively cutting interest rates, making it cheaper, which would allow more capital to flow, especially in the real estate sector, and try to stimulate growth. So this should be very negative for the Chinese yuan, but then positive for the Chinese equities. So that's one of the highlights in the markets today. We have more highlights. So we already discussed the US economy GDP. So the economy likely expanded by an annualized 2% in the second quarter of 2024, up from 1.4% in the first 3 months of this year. So despite the increase, it would mark the slowest consecutive quarters of growth since 2022, falling below the average quarterly growth rate of 3.1% that was seen between 2021 and 2023. So in a sign, the economy is cooling amid higher interest rates. So in the second quarter, consumer spending likely bounced back and rose 2.2% higher and 1.5% in quarter one, and inventories probably accounted for almost 1% of the growth according to the Atlanta Fed GDP Now estimate. However, residential investment likely saw a contraction following double-digit growth in quarter one, and net trade is expected to have a negative impact on growth due to lower exports. So as you can see, this has been the progression. So we expect at least an uptick from here, which would show some health of the economy. But anything around 1.4% or below would be a red flag in the market, necessitating an higher rate cut, which would be negative for the US dollar. So I don't know what else is major. So France business morale weakest since 2020. We'll see how the French stock market is reacting to that. It's trading quite negatively, and I would say all European equity indices. So Swedish producer prices rise the least in 3 months. Yen climbs to 12-week high as Bank of Japan meeting looms. Then South Korea economy unexpectedly contracts in the second quarter of this year. So these are some of the major highlights in the markets. And now I believe it's time we jump right into our favorite part of the presentation, where we basically cover the technical analysis and try to understand where we might be able to identify trading opportunities. So as usual, feel free to raise questions in the comment section, whether you're watching this on X or whether you're watching this on YouTube. So leave a like, a comment, and share the video. This will be much appreciated. So hello and good morning, Waridi. Good morning, Robert Kavale. Thank you for joining. Person using All Sports TV username, welcome, and thank you for joining the session. Affinity Ranger, thank you, love to see it. So what's the impact of a strong USD on indices like S&P and Dow Jones? So that's a really good question, and I'll be looking to answer that next. So let's get into the charts and try to understand where they might be headed next. So this is a chart of the Spanish IBEX, the ESP 35 spot cash index. So as you can see, there's been a big sell-off in the last couple of hours. I think this will be one of the most interesting charts to trade today. So having seen the market erase the gains of literally the last 7 days within 3 hours. So in the last 7 days, this has been the overall price action. So this was the momentum. On the upper side, we can say that the market was following this path, and all these gains were eliminated in 3 hours, and the market is currently testing the support area. So high likelihood that the market will break below that and head into the next support area. So there's still very strong selling momentum after the US equity indices made one of the biggest sell-offs since the year 2002 yesterday and the previous day before that. So European equity indices are currently on a very strong and big panic sell-off. You can see it in Euro 50 after it broke a major support area. So this was the key level support area. The market just broke that and headed much lower. So from the daily chart, this is how it looks like, and it seems like the market is headed much lower. So from the 1 hour chart, this is how it looks like. So the breakout just happened in the last 3 hours, and we are seeing even more bearish momentum. So this panic selling might be the order of the day, taking advantage of this bearish momentum. So for the UK 100 index, we just broke a major support area here. So you can see this was a support area where the market managed to bounce several times, right from the price action on the 1st of May earlier this year. And since then, the market has not broken below that. And then from the daily chart, this is what we are seeing. So an accelerated bearish momentum with the next available price level being around £8,030 per share of the UK 100 index. So from the 1 hour chart, this is how it looks like. And the French 40, as you can see, the reaction is also the same. So big sell-off. I don't know why the market is panicking so much. So from the 1 hour chart in the last 3 hours, we have had a very strong bearish momentum. And I believe I mentioned this earlier in the week that short selling European equity indices might as well be the trade of the week. So there's still more room for downside momentum for this equity index, with 72.81 price level being the next target for the French 40 index. For the DAX, for the German 40, we are seeing a very strong bearish momentum. So there's still more room for downside. We could be seeing the market extending the bearish momentum to around 18,000 and perhaps even 17,948. So this bearish momentum might continue throughout the day. So you have to be on the lookout for that. So away from the most interesting charts of the day, let's get back to the usuals. We have the dollar index here, which has been attempting to make a recovery. So as you can see, last week was the dollar making a recovery, but this week has been more of a sideways momentum. So we are seeing the dollar index trading sideways, and this is an indication of a market that is consolidating and potentially waiting for a major breakout. So right from Friday last week, we can say that the overall momentum in the dollar index has mainly been contained within this box, with this area serving as the support area and this other area serving as the resistance. So the dollar index hasn't been unidirectional. The overall price action has majorly been sideways momentum with a single attempt to break towards the upper side. So with that in mind, we know that other currencies have been having their own paths. One of the key and most interesting currencies to trade this week has been the USD JPY, where the Japanese yen has continued strengthening against the dollar. In hot rooks like a major reversal, we have seen these cycles happen over and over again, but now this one seems to be stronger. So looking at the daily chart, you can see all the activity happening here. So the last time the Bank of Japan intervened, it was at 160. They attempted to push or strengthen the yen. This failed. The market ended up getting into an even higher price action. So this was a multi-decade high around 161.993, almost 162. And since then, from the daily candlesticks, you can see it has been one very strong bearish momentum. So key price levels to observe include this area here, which was previously acting as a resistance, turned into a support during the when the Bank of Japan tried to support the yen. And now the market is headed there. Of course, the long-term trend line for USD JPY is still much lower. So this is the long-term trend line. And of course, the short-term trend line has already been broken. So if you follow this path, then you know the market already broke that trend line. So from the forward chart, this is what we are seeing, a market that broke the trend line, pulled back and made a continuation for the downwards. So if nothing changes, there's a likelihood that the dollar continues losing to the yen as we look forward to the Fed cutting interest rates in September. And as I mentioned, the traders or participants in the markets will not be waiting until September so that they can start selling the dollar. In most cases, you'll see people front running the Fed, and this might be playing out right in front of our eyes. So other interesting charts include USD CAD. The dollar trading against the Canadian dollar has been pretty interesting this week, especially after the Bank of Canada decided to cut interest rates again by 25 basis points. So now we are seeing a very strong momentum towards this area here, which was the high that we saw in the month of April and also the highest price this year. So now we look at the market potentially breaking that and moving higher. In this case, we are seeing the Bank of Canada cutting interest rates twice this year, while the US has not even cut once. So as a result of the monetary policy divergence, all we are seeing is the dollar gaining against the Canadian dollar. And as you can see, this is the 8th straight day where the dollar is just gaining against the CAD. So any form of pullbacks might be welcome to squeeze in more bullish positions. So this bullish momentum is expected to continue for the day until we get the news later in the afternoon, where the GDP data could potentially weaken or strengthen the dollar. So we don't know whether this momentum will be extended. So we could be seeing a major change or a continuation based on the outcome of the data. So Australian dollar has had one of the biggest sell-offs across board. So we discussed these last week with the market showing some strong bearish momentum. So we expected to see some form of bounce from this area, didn't hold for long. So it was a breakout retest continuation, which means that there's still more room for downside after we have seen this price action here. I'll try and show you this trend line and this support area here, where the overall price action was this. But now the market has broken towards the lower side. which indicates a likelihood that the market will continue pushing further downwards. So much welcome reversal. So from the daily chart, there's still more room for downside. We could be seeing 0.64804 price action on AUD USD, as well as New Zealand USD, which is also falling strongly towards 0.58668. So Pound USD seems to be one of those rare currencies holding ground against the dollar. So while other currencies might be losing to the dollar, Australian dollar, New Zealand dollar, and Canadian dollar, we are seeing some strength happening with both the pound and the yen. So despite getting inflation back to 2% and holding there, we saw the Bank of England practice restraint and holding interest rates high at 5%, which has maintained strength for the pound. So if you look at the daily chart, then you'll notice that this month has only been gains, where the pound gained about 3.14% against the dollar before erasing some of those gains and dropping to still 1.92% higher than the dollar this month. And now we are facing a major support area. As you can see, this was a major resistance that we had broken and now turned into a support. The market is struggling to trade below that. So from what we are seeing this week, it's more of a sideways momentum. So I wouldn't say we have had a major trend happening in the pound, but then a major breakout could be playing out. And once it plays out, then it could present trading opportunities for us. So in this case, I would be operating within these two trend lines, waiting to see some form of breakout happen either side. So we don't know the direction it will take. It will most likely be determined by the news this afternoon from the US GDP, which could lead to a major breakout. So if the dollar weakens, then a probable breakout to the upper side, which would present buying opportunities. So dollar trading against the Swiss franc are still losing. In this case, just broke a major support area around 0.88252. Still more room for downside. So in this case, we could be seeing the market headed to the next price level, which is around 0.87417. So this is a major breakout happening on this 1 hour chart. So I expect to see some further downside momentum. And of course, for Euro USD traders, you can see that the market is not making much of a momentum between yesterday and today. So it seems like a ranging environment or a consolidation environment where we don't have a major directional move. It's majorly a sideways momentum. So I would say that this is the range that we're experiencing since yesterday, and a major breakout might be in play later in the day, which could present a nice trading direction. So let's just be patient and wait for the data in the afternoon. So for commodities, we are seeing a big sell-off, gold making a major reversal here. So we expected to see some form of support along this resistance area. Gold simply just broke through it, which implies there is a more selling power. And of course, if you zoom out, remove everything from this chart and just make it clean, then we can all see what's happening here. And the overall market structure is indicating a slightly bullish channel, with the market now on a downswing towards the lower side of the channel. So this has been the overall price action all the way back to the 12th of April this year. So from the high that we saw on 12th of April, this has been the overall price action in gold. So having seen a major swing towards the upper side resistance, market pulling back and continuing to push further back downwards, then we are basically looking at a major swing along these two trend lines, where in this case, the overall expectation is that gold continues with this swing backed by a strong dollar. So in this case, we could be seeing the market headed all the way down to 2306, as we have had some major corrections happening this month. So silver just broke a major support area, so we could be seeing some further bearish momentum. So ever since we got very strong bullish momentum leading to over $32.5 per ounce, this is what we saw here. that's 2.457. The market has only been showing signs of weakness in an attempt to move further back downwards. So if you look at the trend line here and how it coincides with the support area here, then it's more likely that the market will extend this bearish momentum, having broken this major support at 28.621. So there's still more room for downside momentum. It seems like the market is in panic mode. So there's a lot of selling happening across board. So for Brent oil, we saw the market forming a head and shoulder pattern. I remember covering this. So after the head and shoulder pattern, we mentioned that between the head and this left shoulder, we might be seeing some resistance. So after the breakout here, the market went back, formed some resistance, and then eventually made the drop, the breakout, and continuation. So what we are seeing here is yet another break of a major support area here, followed by a retest of the same and a continuation, which might lead to further sell-off towards the previous support at $76.753 dollars per barrel. So today we continue exploring the bearishness in oil. So after the attempted comeback yesterday, which led to further sell-off, now today the attempts to move prices higher seems to have failed, and it seems more likely that the prices will be headed lower. So Bitcoin has not been left out in the corrections and the panic selling, despite all the fundamentals indicating some level of bullishness. So yes, we have had some big sell-off happening over the last 4 days after we saw some multi-week highs around 68,489. So the market has been pulling back downwards, but now we'll be watching for signs of support. Remember, US President Trump, that's the former president and the current leading candidate for the presidency, is about to speak in the Nashville Bitcoin conference, which might lead to more bullish momentum, might be a good vote of confidence. So we could be seeing some recovery happening from these levels. So US equity indices have had one of the biggest sell-offs since the year 2002. So this big sell-off happening in the Nasdaq has not been funny. So this has led to panic mode in the markets, and the panic seems to be only getting worse. We have seen how the panic has also spread to European equity indices. So in this case, I would say that there's still more room for downside momentum, and we could be seeing the market going for this particular trend line, having broken this other one. So from the 4-hour chart, this is how it looks like, and from the 1-hour chart, this is how it looks like. So in this case, we are just seeing a big sell-off in the Nasdaq, and it doesn't seem to be ending as the markets are looking at a major stock market correction. So correction usually go for about 10%. So the market has already hit 8.93% from its recent all-time high to the current low we are seeing today. So there's still more room for about 10% correction, which might land on the lower trend line. So this might be one more push for the day. So we have seen it happening across board. So for the Dow Jones, after United Health Group missed earnings expectations, the stock market index started pulling back downwards. So it's down about 3.82%. So there's still more room for downside momentum. So even on the weekly chart, we have quite an alarming candlestick here, which is a candlestick we haven't seen in a while. We haven't seen a shooting star on the weekly chart, which is usually an indication of a rejection of higher prices and a sign of bad things to come. So in this case, there's more bearish momentum happening, and you can see it in the daily chart. On the 4-hour chart, it seems like the market is bouncing, but overall sentiment seems to be bearish for US stock market indices. Same for SP 500, which has been on a strong bearish momentum after it broke this major support area, which was a major trend line for a while, holding all the way from April earlier this year. So looking at the daily candlesticks, 4-hour candlesticks, you'll notice that this has been a very strong bearish momentum week. And on the daily candlesticks, you can see the size of these bearish candlesticks, indicating a very strong entry by sellers, or basically panic selling in the markets. So we are basically looking at a market that is panicking after seeing very strong valuations for the better part of the year. So this has been our major trend line. So the SP 500 might be looking to bounce from that, but potentially could break below. So from the 1 hour chart, this is how it looks like. It seems like the market is finding support, but there's still more panic in the markets as investors look to capture much lower prices. So in this case, I would not be very trusting of the current price action we are seeing on the 1 hour chart. So unless there is more evidence of buyers coming in, I would still have a bearish bias on the US equity indices. So more to be happening in the markets later in the day, especially during the GDP data announcement. So we'll be looking to cover more. So as we continue in this session, remember that at midday today, we'll be having a new episode of the Bullish Banter podcast dropping in. So if you've been following the podcast, you know that we drop some good knowledge on what's currently happening in the global markets. So this might be a very interesting episode for you. Make sure to check it out at exactly 12 p.m. So I'm looking at the comment section, trying to understand some of these things. So what is the impact of a strong USD on indices like SP 500 and the Dow Jones? So in this case, I would be more focused on the GDP itself. So the GDP is a good indicator of economic health. So if GDP is growing at a much higher pace than expected, then you expect that more people and more companies are selling more products, which might be positive for the stock market. And on the other hand, if the GDP is performing poorly, then that should be negative for the stock market. So rather than comparing the comparison between the currency and the stock market, just look at the GDP versus the stock market indices, which tend to have a positive correlation. So if an economy is growing at a much higher pace than expected, then the stock market is also growing at a similar pace or a pace that rhymes that. So hello and good morning, Joseph. So a good comment from Affinity Ranger must be the uncertainty in the US. Everybody playing safe, waiting for the recession, which is inevitable. Yes, everyone has been calling for a recession over the last 2 years. Somehow this has not been happening due to a lot of fiscal spending and overall economic strength. So the key indicator for the expected recession is the GDP. Remember, a recession is defined by 2 consecutive quarters of economic contraction. We haven't had that for quite a long period of time. So this will be a key indicator to see what's happening with the US economy. And if it happens to be on the uptick, then we should be expecting the stock market to start making some form of recovery. If it's weak, then we could be seeing some more panic selling. So I think it's a similar question from All Sports TV. What's the possible event that will lead to a move back to the bullish trend for Nasdaq, SP 500, and Dow Jones, as well as European equity indices? So I believe one of the major things that could back a recovery would be one, the Fed basically giving more hints that they are looking to cut interest rates in September. An interest rate cut might boost markets. But for today, the only likely event that could boost European as well as US equity indices would be a big jump into positive for the GDP. So for instance, let's say we get 3% GDP growth in Q2. That would be very strong and would likely lead to a recovery in the stock market. So another one, a poll done, this is from Thomas Mashuma. A poll done yesterday after Biden pulled out of the race showed Kamala Harris up 44% against Biden at 42%. Could that have an impact on the dollar? I would say for a trader who can follow the money, polls can be easily manipulated. So look at the betting markets. The betting markets are giving more information because the people who are betting are actually putting their money where their mouth is. And a lot of betting markets are betting on a strong win by former President Trump. So, despite having the fight between Kamala Harris and Biden, here we are looking at a potential win by Trump, who is already moving markets through his speeches. So, in this case, I would be focused on the betting markets and what they are saying rather than the polls happening in the US. So last three, I believe this is the last question. I'm having a challenge to distinguish between stop loss and stop loss limit, please. So stop loss and stop loss limits are easy to understand. Don't know how to show you this. Hopefully I have an active trade. Yes, I have a buy trade on Euro USD. So it was a sample trade I did during one of my classes. So I'll just try and show you this. So in this case, let's say you have a stop loss here, and this is the stop loss for your trade. So in this case, you're saying if the market moves from the current price level and drops all the way down here, you acknowledge you are wrong and you're willing to take an $180 USD loss. So in this case, if you decide to change this into a limit, so you can go to trading stop and then set the trading stop in terms of points. Let's say you want to trail price every 500 points or 50 pips. And this means that every time the market moves up by 50 pips, then your stop loss is adjusted to 0, and then every pip after that. Meaning every pip that goes above 50 pips in your profit side, then the stop loss will keep adjusting in that direction, whether your charts are open or not. So in that case, you have a trading stop kind of a stop loss, which I believe is what you are describing as the limit. So stop loss is a fixed amount that you set as the maximum loss you can go into a trade, which is basically a risk management tool. But then you can add more features by looking into the trading stop and how it works. So thank you very much, guys. Thank you for your time. Remember, we have a free educational course available on YouTube. It's called the Novice to Pro series. Just check it out, especially if you're a beginner. And if you'd like to begin your trading journey, kindly register for a trading account on the links available in the description below. And from there, you can kickstart your journey, start trading, and hopefully you get to grow among other traders. So thank you very much, guys, and I hope to see you on the next session. Remember, there's a new episode of the Bush Banter podcast dropping later today.